So it's a nice time we meet again for the session of advanced financial reporting. So for today, we are going to talk about a topic which is reconstruction and the reorganization of capital structure. So we always say that reconstruction is the alteration of the company's capital structure. So reconstruction is the alteration of the company's capital structure. So we can write the topic of today. That is reconstruction. Reconstruction and reorganization of capital structure. Reconstruction and reorganization of the capital structure So when we talk about reconstruction, I have said it's all about the alteration of the company's capital structure. So alteration, reconstruction is all about the alteration of the company capital structure. Company's capital structure. So on this scenario, you would find that a receiver is appointed. So a receiver is appointed. Receiver will be appointed. Receiver will be appointed. So the receiver will be appointed to alter the capital structure, to alter the capital structure, to alter the capital structure, and to advise, the entity, and to advise the entity, and to advise the entity, and to advise the entity. So we have said that a receiver will be appointed to alter the capital structure and to advise the entity on how to operate, for the foreseeable future, So in order to do just an overview of this reconstruction, once I've said that the alteration of the company structure, that is the company structure, capital structure to be specific, of which we have said the receiver will be appointed to alter the capital structure and to advise the entity on how to operate for the foreseeable future. So during reconstruction, you will find that the par values of ordinary shares are to be reduced. So the par values are reduced. Par value of shares are reduced. So remember that on this scenario, where are we reducing the par value? So you will find that a company was on financial distress. It was suffering. So we can accept as directors, in order to turn around the company to get out of losses so that it can start making profits, we decide to do a reconstruction. We alter the company's capital structure. So whereby we appoint a receiver to alter the company's capital structure and to advise the entity on how to operate for the foreseeable future. So what can be done, you would find that, for example, now shares were trading at 10. So the upper value was shillings 10. Let's say ordinary shares. So we can, as the receiver now, the receiver can advise the company, that is to be specific, the directors, to restructure the capital structure by reducing the par value. The par values of the shares are reduced. Let's say if they were trading at 10, they're reduced to shillings 5, so that we attract more investors who will buy shares, we get more cash. So that is the first thing which can be done. So par value of our shares are reduced. Another thing is all about the old preference shares and the debentures. So old preference shares. So the old preference shares and debentures. Old preference shares and debentures are to be exchanged. So they are to be exchanged. So obviously, if they are exchanged, exchanged with new class are to be exchanged with new class. They are exchanged with new class of preference shares and debentures. So they are exchanged with new preference shares and debentures. That is the scenario of the old class of the preference shares and debentures. So it's like now they renegotiate. So the company will renegotiate with the preference shares and debentures. So alteration of the capital structure is adjusted in a special account known as capital reduction. So we have a special account known as the capital reduction. So we have a special account known as the capital reduction. So special account known as the capital reduction. So the alteration of the capital structure is adjusted for in a special account known as the capital reduction account. Then we have types of reconstructions. So we have the types of reconstruction. So whereby we have internal reconstruction and we have the external reconstruction. So we have the internal and we have the external and internal. So for today, I will start with the external reconstruction. So I will start with the external reconstruction. So external reconstruction concerns whereby you will find that at the same time the company was suffering. So now the directors have proposed to do external reconstruction. So external reconstruction is carried out whereby now a new company acquires the old company. So it's like now the old company is liquidated. The old company is liquidated. So that is why I've said that under external reconstruction, a new company is formed to take over the operations of the old, that is. So under the external reconstruction, a new company is formed to take over the operations of the company which is under financial distress. So unlike the way now we will be talking about internal. So internal is whereby the entity retains its legal identity. So when I will be talking about internal, obvious under internal, the entity retains its legal identity. It's only that we alter the capital structure. Like now I said, what can be done? The par value of a share is reduced and the old class of preference shares and debentures are exchanged with new class. So that is the case of external. So that we have various steps when you are doing this external reconstruction. So what you need to know under external, new company is formed. New company is formed to take over the operations of the old company. So under external reconstruction, I have said we have various steps of carrying out external reconstruction. So step one is obvious, you determine purchase consideration. So let's say, for example, it was A, which was being sold to B. So B is the one which is taking over A. So the first step we determine is how B was paying A. So that is the purchase consideration. Then step two, we close off the books of the old company. So we close off the books of the old company. So remember that the old company is being sold. So we close off the books. Which are these books? We have the realization account. We have the sundry members account. So under sundry members account, we have things like ordinary sundry members account, preference sundry members account. And we will talk about accounts like debentures account and cash book. So those are some of the accounts to close. Then step three, you have to talk about channel entries into books of the new company to record the acquisition. Now the new company, we have to, after we have closed the books of the old company, our step 3 is concerning whereby we will open the journal entries of the new company. So then after we have done the journal entries of the new company, now we can do now the final accounts in the books of the new company. The final accounts in the books of the new company. Those are some of the few and final steps you are supposed to carry out when doing your external reconstruction. So we can make some short notes, then we go direct to the question. So these are the short notes. So I've talked about the steps in external reconstruction, So which are the steps to follow in external reconstruction? So the first step, number 1, is all about determine purchase consideration. Determine purchase consideration. Determine the purchase consideration. So after that, step 2, close off the books. Close off the books of the old company. The old company. So that is, we have which books are these? We have the realization account. We have the sundry members account. So after sundry members account, we have the cash book account. We have the cash book account. The number 3, step 3, is all about now we do the journal entries. Do the journal entries. So journal entries in the books. So journal entries in the books of the new company. Journal entries in the books of the new company to record the acquisition. To record the acquisition. So after you are done with those, you do number 4. Step 4 is now the final accounts. Final accounts in the books. Final accounts in the books of the new company. In the books of the new company. So after we are done with now the steps of external reconstruction, we can go to the question of May 2016. May 2016 question 3. So May 2016 question 3. So I'm doing the question of May 2016 question 3, which I will be sharing on the other side so that you can be able to, we go through together, then we can be able to compare. So this is the question. It reads, so a salary remittent, which has been operating in the telecommunication sector, has been posting successive trading losses. The directors of the company have made a proposal to reconstruct the company by transferring the entire operations of the company to a new entity to be called Sawadi Limited, with effect from 1st April 2016. So you can see we have Asara, which is operating in the telecommunication sector, which has been posting successive trading losses. So the directors of the company have made a proposal to reconstruct the company by transferring the entire operations of the company to a new entity called Sawadi. So which means that Sawadi is acquiring Asara. So then obviously you would be given the statement of financial position of the old company. So because that is now the one we will check and reconstruct, because now the old company is the one which was suffering financially. So that is the relevant statement of financial position of the old company. So we don't have to read those items. You know them: assets, liabilities, and equity. So additional information. Now, under additional information, you need to know this. What you would be given here is on how the new company, which is called Sawadi, will compensate the providers of capital in the old company. And you know that the providers of capital in the old company is either, it can be in any company. The providers of capital can be, a question to you. So the providers of capital in any company. Sorry? So the providers of capital in any company, they can be?
The shareholders.
To be specific, one, who? Ordinary shareholders, another one?
Investor.
So all those are investors. So we have ordinary shareholders,
Debenture
preference
hold-
shareholders, and mostly you will find the loan
debenture
holder,
holder.
loan note holders, the one who provide loan to the company. We call them mostly debenture holders. But in general, they are loan note holders. So we have ordinary shareholders, preference shareholders, and loan note holders. So to be specific, mostly you will find that under loan note holders is the debenture holders. So that note 1, now under the additional information from note 1 to note 8, the first thing we check is on how Sawadi was paying the providers of capital in Asara. So they are saying number 1, Sawadi issued 3 new ordinary shares of shillings 10 each for every 5 7% cumulative preference shares in Asara Limited. In addition, the 7% cumulative preference shareholders in Asara were issued with 2 new 10% preference shares of shillings 10 each. That is shillings 10 per value in Sawadi for every 5 7% cumulative preference shares held. So in this scenario, remember Sawadi issued 3 new ordinary shares. He issued ordinary shares to who? To the providers of capital of Asara. To be specific, who is these providers of capital of Asara who is compensated in this additional information number 1? To be specific in this sentence. So Sawadi issued 3 new ordinary shares of shillings 10 each for every 5 7% cumulative preference shares in Asara, which means that the preference shareholders, the 7% cumulative preference shareholders in Asara are being compensated. In which way? For every 3 new ordinary shares, for every 5 they held, they were given 3 new. So they say 3 new for every 5. So for every 5 held, they were given 3 new ordinary shares. So those are the preference shareholders in Asara. And one of the ordinary shares, each ordinary share they are given goes for shillings 10. Then the second sentence they say under note 1, in addition, the 7% cumulative preference shareholders in Asara, you can see are the same providers of capital, the preference shareholders, were issued with 2 new 10% preference shares. So which means that they are given again preference shares, 2 new preference shares of shillings 10 per value in Sawadi for every 5 7% cumulative preference shares held. So in this note 1, it means that they were given ordinary shares, 3 for every 5, and they are also given, these preference shareholders are also given preference shares, 10% preference shares. In which proportion? For every, that is 2 for every 5. So number 2, preference dividends in Asara were 3 years in arrears. So first you have to determine those preference dividends in arrears. So preference dividends in arrears were 3 years in arrears. So you go to your balance sheet, you check where we have preference share capital, because now that is the point whereby the preference dividends were paid to. So this preference share capital was 4,000. It was 4,000. So since it is 4,000 and the contractual rate is 7%, so to get the relevant dividends, you take 7% times 4,000. For how many years were in arrears? 3 years times 3. You determine the one which were in arrears. How are they being compensated? They said in note 2, the second sentence there, the 7% cumulative preference shareholders in Asara will accept 3 fully paid ordinary shares. So it means that they were paid ordinary shares. So 3 fully paid ordinary shares of shillings 10 each in Sawadi and shillings 20 of the 8% debenture in Sawadi for every 1,000, not 1,000, 100, for every 100 of the preference dividends in arrears. So which means that these preference dividends which were in arrears, the relevant preference shareholders, which are the relevant providers of capital, were given ordinary shares in a proportion of 3 ordinary shares for every 100 of the preference dividends in arrears, and also they were given a shilling 20 debenture, which is 1 debenture going at 20 for every 100 of the preference dividends in arrears. So that the next note, sorry for that. So the next additional information, is additional information number 3. The existing 10% debenture holders in Asara were issued with, so which means that the debenture holders in Asara were issued with 5 fully paid ordinary shares. So they were given ordinary shares of shillings 10 each in Sawadi and shillings 40 of 8% debenture for every shillings 100 of the 10% debentures. So which means that the debenture holders in Asara were given 5 fully paid ordinary shares. So they were given 5 fully paid ordinary shares for every 100, these are 100, for every 100 of the debenture. And also they were given 40, they were given shillings 40, they were given a shillings 40, 8% debenture, a shillings 40, 8% debenture. So that is one debenture going at shillings 100. So we will equate and determine, so that we go to the next additional information, that is additional information number 4. So the additional information number 4, they say, the additional information number 4, they say this. So the additional information number 4. So we were going to the next additional information, that is additional information number 4. So the additional information number 4, this is number 4. So additional information number 4, remember that on this scenario again, it's all about how we are trying to determine how Sawadi was compensating the providers of capital in Asara. So like now in note 4, you can see they say the ordinary shareholders in Asara. So that is one of the providers of capital. So the ordinary shareholders in Asara were issued with what? They were issued with 2 new ordinary of shillings 10 each in Sawadi for every 5 ordinary shares held. Number 5, the current liabilities of Asara were taken over by Sawadi at book value. That is fine. Current liabilities were taken over at book value. That is as per the balance sheet. Then assets were taken over by Sawadi at their fair values as follows. So you can see them. Like now, property, plant, and equipment, 9,486.8. Available for sale financial assets, 810. We have inventories and so on. Number 7, we have the liquidation expense of Asara amounted to 30,000 and they were paid by Sawadi Limited. All the above transactions were completed on 1st April 2016. So another thing you need to know is all about this liquidation expense. So if the liquidation expense is paid by the new company, now the new company which is acquiring the old company, if it's paid by the new company, that is, like now in this scenario, the liquidation expense, according to note 7, it was paid by who? By Sawadi, because they say liquidation expense of Asara amounted to 30,000 and were paid by Sawadi Limited. So if it's paid by the new company now, this is the one which is acquiring the old one, this amount must be included as part of purchase consideration. Number 8, all the above transactions were completed on 1st April 2016. What is needed by the examiner is relevant reg accounts to close off the books of Asara Limited, journal entries to record the relevant transactions in the books of Sawadi Limited, statement of financial position of Sawadi Limited as at 1st April 2016. So after you have gone through the relevant work that is concerning the question, we go direct to the question, of which I said we have various steps to follow. Which you can see on my screen, which are shared on your side. So first thing you do is all about you determine purchase consideration. Then number 2, you close of the books of the old company. Number 3, you do the journal entries. Entries in the books of the new company to record the acquisition. Then finally, you do the final accounts in the books of the new company. So we were supposed now to do question. So that is the continuation part of this question. So this is the question for May 2016, question 3. So the requirement was all about we do the relevant right accounts, the journal entries, and we do the statement of financial position. So to start with, even before you do the journal entries, you have to do first the relevant right accounts. Even before you do those relevant right accounts, you have to determine the purchase consideration. You have to determine the purchase consideration. So let's go and determine the purchase consideration. So which means that we are trying to determine how Sawadi was paying the providers of capital in Asara. So that is the first thing, purchase consideration. So the purchase consideration. So when we are doing the purchase consideration, we talk about, so we don't have to do that. So in order to do the purchase consideration, we just say purchase consideration. So the purchase consideration, you talk about now analysis from additional information number 1 to the last one. So if I start with additional information number 1, additional information number 1, which I think you have the question, which I have read already. So additional information number 1, they were saying this. So I can display again so that we do together. So additional information number 1, they say that Sawad Limited issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Asara. So that is the first thing to record. So which means that Sawadi was issuing ordinary shares for every 7% cumulative preference shares in Asara. So which means that he was paying preference shareholders, whereby he was giving them ordinary shares. So 3 new ordinary shares for every 5. So 3 new for every 5. So what you do, you say here, they were being given ordinary shares. They were being given ordinary shares. So 3 for every 5. So remember that this is ordinary. 3 for every 5. To understand more about this, remember that they were given 3 ordinary for every 5 preference. So 3 ordinary for every preference. So which means that this was to preference shareholders. This was going to preference shareholders. 3 for every 5. So how many preferences were there in Asara? So you go to the statement of financial position. Go to the statement of financial position, check the relevant preference shares. So we can see the 7% cumulative preference shares, 10 per value. So total value is 4,000. So shares out of that is 400. So you take the 400 preference. So what about that? So it's the same way you could have said 3 for every 5, 3 over 5 times the 400. So in order to get now the ordinary shares, which the preference shareholders were being given. So for every these ordinary shares which they are being given, each was going at shillings 10. So we can confirm that. We can confirm that from our question. So each was going at shillings 10. So note 1, they say Sawad issued 3 new ordinary shares of shillings 10. So you can see that they issued an ordinary shares of shillings 10. So that is why after getting the ordinary shares which are being issued, we multiply with shillings 10 to get the total value, to get the relevant value. So if you can do that, you will take 3 times 3, that is 3 over 5, 3 out of 5, times 400 times 10. So I'm getting the first one is 2400. So that is 2400. Then we continue with the same additional information. That is additional information number 1. The same additional information number 1. in the second sentence there, in addition information number 1, they say, in addition, the 7% cumulative preference shareholders in Asara were issued with 2 new 10% preference shares of 10 per value. So in addition, they were given 2 new. So they were given 2 new 10% preference shares for every word. For every 5, 7% cumulative preference shares. So again, it's the same preference shareholders who are being paid. So in which proportion? 2 for every 5. 2 for every 5. So they are given what? They were given preference shares. So they are being given preference shares. So to be specific, which are these preference shares? So they were 7% or 10%. They were 10%. 10% preference shares. So 2 for every 5. 2 for every 5. So 2 for every 5. So these are 10%. So 2 for every 5. So times the number of the preference shares. Times the number of the preference shares. So the number of preference shares, because those are the ones which are compensated. So the number of preference shares of Asara. So preference shares of Asara, again, it's 400 because it was 4,000, the total value there. Per value was 10. So you take 4,000 divided by 10, you get 400. So that is 400. So you have just determined the preference shares which they were given. So 10% preference shares. So those are the number. So these preference shares which were being given out, each was going at what shillings. So they have said, so the 2 new 10% preference shares of shillings 10 per value, of shillings 10 per value, of shillings 10 per value. So we have to multiply with shillings 10. We have to multiply with shillings 10. So if you take 2 out of 5 times 400 times 10, so you get 1600. You get the 1600. So after that, you move to the next thing. So the next thing is concerning additional information number 2. So additional information number 2, they said, who are they compensating? The preference dividends in Asara were 3 years in arrears. The preference dividends in Asara were 3 years in arrears. So let us first determine these preference dividends in arrears. So go to the preference share capital of Asara in the balance sheet. So you can see it was 7%. 7% cumulative preference share capital. So the total value is 4,000. So to get the relevant dividends, you take 7% times the 4,000, you get for 1 year, but it was in arrears for many years? For 3 years. It was in arrears for 3 years. So 7% times what? Times 4,000 times 3 years. I think it was 3 years. That is fine. So 0.07 times 4,000 times 3. So that is 840. That is 800. So the 840 is the one which they need now to compensate. So how will Sawadi compensate this 840? How did he compensate them? So you go to the additional information again. So they said in the additional information number 2, this sentence, they said the 7% cumulative preference shareholders in Asara will accept 3 fully paid ordinary shares of shillings 10 each in Sawadi and shillings 20 of the 8% debentures in Sawadi for every 100 of the preference dividends in arrears. So what you do here, what you are supposed to do, remember that these preference dividends which were in arrears, so the preference shareholders in Asara were compensated by being given 3 fully paid ordinary shares, 3 fully paid ordinary shares, 3 fully paid ordinary shares for every 100, these 100 of the preference dividends in arrears. So 3 for every 100. So that is the first scenario. So 3 for every 100 of the preference. 3 for every 100. Again, they said this, there was another way of compensation. So they were compensated in two ways. Another way they said, and this one, and shillings 20 of the 8% debenture. So they said that it was 3 fully paid ordinary shares of shillings 10 and 20% of the 8% debenture. So this is like one debenture going at shillings 20. So one debenture for every 100 of the preference dividends in arrears. So one debenture. Remember this one was ordinary. So then you talk about one debenture of shillings 20 for this 100. So what about the 840? What about the 840? Remember the first one. Again, remember this is all about, before we record the first one. Remember that this one is also to preference. This one is to preference share. This one is again to preference shareholders. This is to preference shareholders. So to preference shareholders. So these preference shareholders, now record these relevant information on how these preference shareholders were being compensated concerning those preference dividends in arrears. So they were being given 3 ordinary for every 100 of those preference dividends, then 1 debenture for every 100 of those preference dividends in arrears. So you will take and say, remember that they were being given ordinary shares. So which you would say 840 times 3 over 100, 840 times 3, you divide by 100. So this one we have to determine now. After determining the relevant shares, we have to multiply per share, those per share concerning Sawadi, which gave to Asara. So it was trading at what? Then this one was all about debentures. So this is a debenture. So a debenture concerns 840 times 1. Then we have to determine per share was at what value? Per debenture, not per share. Per debenture was at what value? So let's go to the question and check it was at what value. So you can see here, it was not 2. This ordinary was going at what? So they say the 7%. So I'm reading the second sentence in note 2. The 7% cumulative preference shareholders in Asara will accept 3 fully paid. Will accept 3 fully paid ordinary shares of shillings 10 each. So which means that those ordinary shares which Sawadi gave to Asara to compensate them concerning these preference dividends was going at shillings 10. Then what about this debenture? Under shillings 20 debenture, so the debenture was at 20. So 10 and 20. So this one I have to multiply with 10, and this is 20. So do the first one and the second one at the same time. So the first one I'm getting 252. Then the second one, 840 divided by 100 times 20, 168. That is fine. So after we are done with that additional information, we move to the next one. That is additional information number 3. So additional information number 3 is concerning the existing 10% debenture holders in Asara were issued with 5 fully paid ordinary shares of 10 each in Sawadi, and shillings 10, not shillings 10, and shillings 40 of the 8% debentures. So also in this scenario, who is being compensated in Asara? So the existing 10% debenture holders in Asara were issued with what? So which means that debenture holders are being compensated. So you just write first to debenture holders, to debenture holders. So to debenture holders. So these debenture holders were given what? What did they receive? What did they receive? So these debenture holders received these relevant. So they said that in note 3, the 10% debenture holders in Asara were issued with 5 fully paid ordinary shares. So 5 ordinary of shillings 10 each, and shillings 40 of the 8% debenture. That is 1 debenture. So 5 fully paid ordinary and 1 debenture of shillings 40 for every 100 of the 10% debenture. So they were being given ordinary shares. So 5 ordinary shares we will equate with 100. So 5 is equals to 100. What about now? You will say again 1 debenture is equals to 100. What about the debenture which was above there? So there are 4,000. So non-current assets, under that you can see 10% debenture, 4,000. So let us start with ordinary. So ordinary, I will say 5 fully paid ordinary for every 100 of the debenture, 5 for every 100. So it was 5 ordinary for every 100. What about the 4,000? Then at the same time, the 1 debenture for every 100. What about the 4,000? So you would say ordinary. They were being given ordinary shares. So these ordinary shares, you say 4,000 times what? Times 5 over 100 times shillings what? We'll check that. So these ordinary shares which is award issued, each was going at what? We will check. Then again, we have a debenture. So debenture, remember the debenture, I will say 4,000 times 1 over 100. So I remember this one was, every debenture was at shillings 40. Every debenture was at shillings 40. What about this ordinary? This ordinary was at, this ordinary was going at what? This fully paid ordinary share of shillings 10, of shillings 10, of shillings 10. So remember that this one is an 8% debenture, so which means that this is shillings 10. So give me the answer. So is this one 2,000? Is this one 2,000?
Yes, it's 2,000.
Then the next one?
Yes.
The next one is 1,600. Eh? So we continue to the next additional information. So that is additional information number 4. So number 4, they said the ordinary shareholders in Asara were issued with 2 new. So they were issued with 2 new ordinary shares of shillings 10 each. Of shillings 10 each. So the next additional information we were moving to is additional information number 4. So additional information number 4, they say the ordinary shareholders in Asara were issued with 2 new ordinary shares of shillings 10 each in Sawadi for every 5 ordinary shares held. So 2 new. So the ordinary shareholders in Asara were issued with 2 new ordinary shares of shillings 10 each for every 5 ordinary shares held. So 2 new ordinary. So they were being, so Sawadi was compensating Asara, so the providers of capital in Asara. So he gave them what? So in this scenario, he was compensating ordinary shareholders. He gave them 2 new ordinary of shillings 10 each for every 5 ordinary shares held. So we record, we say to ordinary. So we say to ordinary shareholders. So to ordinary shareholders, whereby they are given ordinary shares. So 2 for every what? It was 2 for every 5, I think so. I can confirm. So 2 for every what? So they say 2. So the ordinary shareholders in Asara were issued 2 new ordinary for every 5. 2 for every 5. So how many of these ordinary shares which were there? So you go to your equity, ordinary shares 6,000, the total value. So which means that the ordinary shares are 600. Per value is 10. So you take 6,000 divided by 10. That is where I'm getting the 600 from. That is where I'm getting the 600 from. So them 600 times shillings 10. This ordinary which they were given, each was going at shillings 10. Each was going at shillings 10. So you take 2 over 5. 2 over 5 times 600 times 10 times 10. So that is 2,400. Then I said, if the liquidation expense, so liquidation expense is paid by the new company, we include that amount as part of purchase consideration, of which if you go to your question, the liquidation expense was paid by the purchasing company, and that one can be seen in additional information note 7. So there, whereby they say the liquidation expenses of Asara amounted to 30,000 and were paid by Sawadi Limited. So it was paid by Sawadi, which is the new company, which is acquiring Asara, which is taking over Asara. So which means that this amount of 30 will be included there. That amount of 30 will be included under purchase consideration. So after that, we have to talk about now the total. You have to give me the total. So the total is all about taking 2,400. So remember this one was in thousands. That is why I've recorded 30 instead of 30,000. So you say 2,400 plus 1,600 plus 252 plus 168 plus 2,000 plus 1,600. After 1,600 plus 2,400 plus 30. So I'm getting 10,450. 10,400. So now the next part, after we are done with the first step of doing the purchase consideration, so the next thing now is to do the relevant rate accounts. So of which I will start with the first one called Sawadi. So I do Sawadi account. So Sawadi account, what we'll do here is all about to show how Sawadi paid. So it shows how Sawadi paid Asara. So that's why I'm debiting purchase consideration. So the purchasing consideration was 10,450, the total amount we have arrived at when we were doing our first scenario here. So this 10,450, this one was arrived at in which way? So this 10,450 was arrived at whereby they gave preference shareholders ordinary shares, preference shares, ordinary shares, debentures. They gave debentures ordinary debentures, and ordinary shareholders were given ordinary shares. So we have to record everything which is in this purchase consideration. So I will start with ordinary on our credit side. So ordinary shares. So I have to record ordinary shares. So the ordinary shares I have to record there is this one. So this ordinary, that is the first one. The second one was this. The third one was this. Then the fourth one is this one. So you take 2,400 plus 252. Plus 2,000 plus what? Plus 2,400. What are you getting? So I'm getting here 70,52. So after that, there was preference. So this preference, And again, was there preference anywhere? So there was no preference. So I would say 10% preference. So the 10% preference is the 1600. Then after that, we have to check another thing. After that, we need to check another thing. So another thing is concerning this one, the debentures. So the debentures was 168 and this one of 1600. So the two, so the 8% debentures. So that is 168 plus 1600. So you get 1768. So that is 1768. Then finally there is this cash book. So the 30. So this amount which was being as a liquidation expense, which was given by Sawadi. So the 30. So this one will balance automatically 10 for 50, 10 for 50, for 50. Then after that, the next account to do is concerning the ordinary sundry members account. Ordinary sundry members account. So ordinary sundry members account balance brought down. So balance brought down is for the ordinary share capital. So you go to the balance sheet. So ordinary share capital 6,000. I think you are seeing that. That is 6,000. So we have the 6,000. So after the 6,000, now you check what they received from Sawadi. What they received from Sawadi. So what they received from Sawadi, you go to your purchase consideration. You check where they say to ordinary, because these are ordinary shareholders members account we are doing. So you check where they say to ordinary shareholders. So this is the point, to ordinary shareholders. So to ordinary shareholders, ordinary shares, 2,400. So you record they received ordinary, so ordinary shares, so the 2,400. Then after that, what are you supposed to debit again? You debit the assets not taken over. Debit the assets not taken over. So the assets not taken over by Sawadi. So how can you know these assets were not taken over? So in note 6, you can see note 6 here. These are the assets which were taken over. So you compare with what you have in your balance sheet. So in this balance sheet, if you can check, like now property, plant and equipment, it's in note 6, it was taken over. You can see it's there. Available for sale, financial asset, it's there. Inventories, it's there. So the only item which is not there in note 6, which was not taken over, is this goodwill and the preliminary expenses. Goodwill and the preliminary expenses. So that is the assets which were not taken over. So you debit them. So debit assets not taken over. Goodwill, which is 120 according to the book value. That is the value of the balance sheet. And the preliminary expenses. So under the preliminary expenses. So preliminary expenses is 87 point something. So that is, we can check. I think I saw a figure like it's 7 point something. So it's 87.8. You can see that 87.8. So after you have recorded assets not taken over, then on the credit side, you record the reserves. So reserves, things like a revaluation reserve. So revaluation reserve was there, including share premium, including the share premium. So that the revaluation reserve was what in this question? So I can see under equity, we have a revaluation reserve of 400.8. So never record revenue reserve, because you can see this revenue reserve is the same as retained earnings. And this retained earnings is an accumulated loss. So the company has been making losses. So that's why it's a negative. So if it was nice, if we were in a positive, we were in a going concern position, we could have not been doing a reconstruction. That is why you can see our retained earnings, which is also called revenue reserve, is a negative. So that one you will debit. That one you will debit, and you will call it accumulated losses. Accumulated losses. So that our revaluation reserve was, before I debit that accumulated losses, before I debit the accumulated losses. So this one is 400.8 revaluation reserve. So this is 400.8, and this is 3822.7. I think that is the relevant figure. Yes, 3822.7. So there was no share premium. So what you need to know, what you are recording this account is, start with balance pro down, record what they received from Zawadi, that is from the new company. Again, debit assets not taken over, including accumulated losses, then credit reserves, things like revaluation reserves, including share premium, so that the balancing figure goes to the realization account. So the balancing figure goes to the realization account. So I can see the debit side is 2400 plus 120 plus 87.8 plus 3822.7. So the debit side is 6430.5. So this is 6430.5. So 6430.5. So if you take 6400, so because the credit side I can see 6400.8 minus your answer, I'm getting 29.7. So this goes to the realization account. So this one goes to the realization account. So that one is closed to the realization account. So after we are done with the two relevant accounts, that is the reg account. So the third account we do here, the preference sundry members account. Preference sundry members account. So preference sundry members account. So to preference sundry members account, again you start with balance brought down. So balance brought down is concerning the preference share capital from the balance sheet. Preference share capital from the balance sheet. So from the balance sheet, our preference share capital is 4,000. So that is 4,000. Then again, you increase with preference dividends in arrears. So the one which were in arrears. So remember the one which were in arrears, they had not been paid. So you have to credit and increase your preference sundry members account. So what you do, go to your question. So go to your question and check note. It was not what? It was additional information number 2. So additional information number 2, they are saying the preference dividends in ASARA were 3 years in arrears. I think this one we did earlier. So what you do, check preference share capital. So 7% times the 4,000 times 3 years. We got, I think, 1,000. So it was 1,000, not 1,000, but 840. So sorry for that. So it was 840. So 7% times 4,000 times 3 years, because that one was in 3 years arrears. So you recorded the 840 there. So the 840, the dividends which was in arrears. And this one goes to realization. This one is closed to realization. So after that, we talk about what is coming from Zawadi. So what is coming from Zawadi? So what was coming from Zawadi, you check whereby the preference shareholders, because these are about preference sundry. So whereby the preference shareholders are being compensated. So they said to preference shareholders, and this one to preference shareholders. So they are given ordinary, and we have ordinary. We combine the two. So we have ordinary. So I write in short, that's ordinary. So the 24 plus 252. So this one and this one. Because this one both was owing to preference and to preference. So you get 2652. You get 2652, the total. Then again, they were given 10% preference shares. So they were given 10% preference shares. So you talk about 10% preference. So which is 1600. So that is this one. That is what they were given because this is to preference. And again, under to preference, there is this 8% debentures. So 8% debentures. So that is 168. So that one. So up to that point, you determine your balancing figure to realization account. So this one is 4840. Here is 4840. So the balancing figure there is so 2652 plus 1600 plus 168. So 2652 plus 1600 plus 168. Then we take 4840 minus answer. So that is 420. Then finally the third account, the second trust, I think, not even the second trust, because I'm remaining again with cash book. Then after cash book, realization account. So we have to do the debentures account. So for the debentures account, balance brought down. So after we are done with the debentures, we do the cash book account. So the cash book account concerns, so you talk about balance brought down, of which I know there was no cash in the balance sheet. Then what they received from Sawadi. So from Sawadi is the 30. The 30 which was being paid as a liquidation on their behalf. So that one is the one we close to realization account. So to realization account, the 30. So after that, now the last thing we do now is the major thing, which closes everything now, which closes this asara, which is called the realization. So the cash book was concerning, so you record your cash book. So the 30. So what we have done here is all concerning the realization account. Or with this realization account, is all about you debit all the assets. You debit all the assets which were being taken over at their book values. So that is what I've recorded. So up to this point, these are the assets. Then again, you credit all the liabilities. Up to this point, these are the liabilities. Then you close. You just close all the accounts which we have been preparing to this account. Like now we started with the sundry members account. This balance which was here, we credited, it was on debit. Ordinary sundry, it was on credit, we debited. Then what I've done, The third account is all about preference. The preference dividends in arrears. This one you debit. Then the balancing figure for 20, which was on the debit side, you credit. Then the debentures account, which was on the debentures account, which was on the debit side, you credit. So that is what I have done. That is what I have done in that account. That is what I've done. So that this account realization is supposed to balance automatically. So let us continue now. So now we do the journal entries. So journal entries now in Zawadi. So remember the journal entries, they must have a debit and a credit. They must have a debit and a credit, and then in every debit and credit you do, it must be equal to each other, and you have to make a narration of what you have done. So like now the first thing you do is all about to recognize the purchase consideration. The purchase consideration was 10,450. You recognize that by recording business purchase account. The 10,450. Then remember that it was Asara who was supposed to be paid. You credit Asara. So the 10,450. So you say to recognize amount payable to Asara. To record amount payable to Asara. So after that, now you show how the amount was paid. So you say Asara Limited. So 10,450. So this amount was paid in these ways. We did that one in our first account. So in our first account, they are called Zawadi. This purchase consideration of 10,450 was made by them being given ordinary shares of 7052, preference of 1,600, and 8% debentures of 1,768, and a cash book of 30. So that is cash. So you record those amounts. So the first one is ordinary, 7052. You record 10% preference. So that is 1,600. You record 8% debenture. So 8% debenture is 1,768. Then we have cash book, that is cash, 30. So up to that point, you will say to on settlement. So this is on settlement of purchase consideration. On settlement of purchase consideration. Then after that, you record all assets which were taken over, the way they were taken over now according to note 6. I think according to note 6, we have PPE, available for sale assets. We have some inventories. So let's check. So PP, available for sale, inventories, account receivable, and financial asset through profit and loss. So inventories, account receivables. So we have inventories, account receivable, and we have financial asset through profit and loss. It was through profit and loss, through P&L, profit and loss. So these are according to note 6. You record with those figures in note 6, the way they were taken over. PP is 94, 86.8. This one is 810, 608.7. We have 477.1, and we have 216.4. So you credit with business purchase account. Business purchase account. So add the total of those assets, credit with those with that figure as business purchase account. So 9486.8 plus 810 plus 608.7 plus 477.1 plus 216.4. So that is 11,599. So up to that point, you would say to record assets taken over. To record assets taken over from Asara. So after you are done with that, now the next thing to record here is liabilities. So liabilities, remember you credit. So you debit business purchase account. Then you credit liabilities. So liabilities, we have bank overdraft. Note 5, they said they were being taken over at book value. And you can see in your balance sheet, we have bank overdraft, we have payables, and we have income tax. So bank overdraft, as per the balance sheet, under the current liabilities, is all about 775.8. We have 1962, and we have 275.1. So that total you debit with business purchase account, because now that is the one which was buying. So with that account, it shows what it was, what's award both. So that account records all the items which were both. So the total is 3012.9. So that you say to record liabilities taken over. After that, you check goodwill. So you debit goodwill, you credit business purchase account. So goodwill, you say goodwill. Goodwill concerns assets, that is a purchase consideration. You say purchase consideration minus net assets. So which purchase consideration is 10,450 minus the net assets, which is assets. Remember that the assets which it both, the total is 11,599. 11,599 minus the liabilities 3012.9. So if you do that, 11,599 minus 3012.9, then you take 10,450 minus answer. So I'm getting 1863.9. So 1863.9 to record liabilities, not liabilities, but this is goodwill. To record goodwill on acquisition. To record goodwill on acquisition. And the last step to finish with is concerning now the statement of financial position, which is very easy. Very easy. The last part is now the statement of financial position of Sawad. So we say Sawad Limited. So Sawad Limited statement of financial position. So statement of financial position, you record now the non-current assets. So this is all about, you can record them. This is very easy because you can score this one even without doing a lot of information. Because even if time is not on your side concerning exam period, go to this statement of financial position. You can do it in 5 minutes because you know the assets were taken over. You record those assets which were taken over, the way they were taken over. Like now in note 6, the way they are. Then current liabilities you record with their book value. Those are around 6 marks. You will score automatically. So let us do that. So I will record note 6, the assets the way they are. Note 5, I will record my current liabilities with their book values the way they are in the balance sheet. It's only the bank overdraft I will raise by 30 because there was that amount of 30 which was paid by Sawadi to Asara concerning a liquidation expense, and it was not paid back, and there was no cash to pay that. That is why I will increase my bank overdraft. Then after that, I will record some key items and some non-current liabilities, and that would be the end of the question. So let us record. So I will record PPE. So according to note 6, my PPE was 9486.8. So that is 9486.8. Then we have available for sale financial assets. It was 810. Then there was goodwill, the goodwill which we have done. The goodwill we have just done. So this goodwill, 1863.9. So that is the one you have to record, 1863.9, which I said purchase consideration minus net assets, 1863.9. Then after that, you record current assets. So current assets, you go to note 6, inventories. Under that note 6, inventories, we have 608.7. Then we have again note 6, we have account receivables. So the receivables is 477.1. Then we have in note 6 again the assets which were taken over, financial assets at fair value through profit and loss. So anyway, you know that. Check in note 6 to 16.4. So you can see the only thing needed are working is this. And the examiner always marks one by one. One entry, one mark. One entry, one mark. So finally we do equity and liabilities. So finally we do equities and liabilities. So the equities and liabilities, you record them from what Sawadi gave Asara. From our first account, which was a Sawadi account. So this account. So there's this ordinary, this one, and there's this preference. So for debentures, I will record under liabilities. So I have a ordinary share capital and 10% preference share capital. So I have the ordinary share capital of 7052. So that is 7052, and I have shown you 10% preference shares. So 10% preference shares, 1600. So after that, we go to non-current liabilities. So for the non-current liabilities, I have said again in this account, you record this debenture, the 1768, 8% debenture. Then finally, current liabilities. So under the current liabilities, you record, because they said note 5. Note 5, they said that. So this note 5, they said the current liabilities of Asara were taken over by Sawadi at book values. So which means that the current liabilities will record the way they are in this balance sheet. Only the bank overdraft I will increase with the 30, which was being liquidation expense according to note 7. This liquidation expense of Asara amounted to 30, which was being paid by Sawadi. So I have to increase that bank overdraft by this 30. Why? Because this one was paid by the purchasing company instead of Asara being incurring that amount. So since there was no cash to pay that 30, I have to increase my bank overdraft because this amount was not paid. So then the others accounts payable will remain, current income tax will remain. So bank overdraft was 775.8 plus the 30. So that one will be 805.8. The next, I will talk about payables. The way it is in the balance sheet, 1962. Then current tax. So the current tax is 275.1. 275.1. So 275.1.1. So which means that this is total equity and liabilities. Total equity and liabilities. Then we have here total assets. So let's check if it's balancing. Let's check if it was balancing. So check 9486.8 plus 810 plus 1863.9 plus 608.7 plus 477.1 plus 216.4. I'm getting, for the assets is 13,462.9. Then for the liabilities and equity, 7052 plus 1600 plus 1768 plus 805.8 plus 1962 plus 275.1. So I'm getting the same, 13,462.9. 13,462.9. So which means that is how you are supposed to do this question of external reconstruction for May 2016 question 3. For May 2016 question 3. So when you meet next time, I will be doing another question for internal reconstruction, whereby now the company decided to alter the capital structure of the company internally without selling the entity to the external company. So that is the end of the class today. My name is CPA Edwin Ochoi. So I always teach at Regional Center of Management, that is at Commonwealth, opposite Garitos, 50th floor. So for now, I'm carrying out block revisions, whereby you can be able to reach me for a private session, because for now schools are closed, but I can be able to do a private session for you if you need be. So you can reach me through 0728 760 546. And at the same time, never forget to click that subscription, the subscription button which is down there after you have watched this video, because it has benefited you, I know, 100%. So subscribe, and share with other students of finance, and also request them to subscribe. And also never forget to press the notification button so that you will be notified in case of the coming videos. So this platform of my YouTube, I want to make it like a school, whereby now I'm going to coordinate with other lecturers to make sure we give out the content of the 18 papers, and that one will be uploaded through this platform. the Edwin Ochoi YouTube channel. So if you need to gain in the future, I know for now this is a section 6 paper, but at the same time in the other program, this paper can be there. And also you have colleagues who are doing this. So tell them to subscribe and subscribe and subscribe so that they would be getting free content. I know other channels which give free sessions for CPA is just a bit. Then others were some asked to buy. But this channel would be giving you free content. It's all about what you need is just watch and subscribe to my channel. That is how it's simple to pass CPA. It's just a few steps from the buying data. So I would appreciate for your support. And at the same time, anybody in need of my services in financial reporting, advanced financial reporting, financial accounting, part 1 of CPA, and then other areas, Bachelor of Commerce, in any area where we have anything concerning financial accounting, I would chip in. Then I have my colleagues who handle the other areas like quantitative analysis. We have financial management, taxation. Have a nice week ahead. We meet next time when I will be uploading again another video for internal reconstruction. Thank you for your time.